Good afternoon. Nifty at an all-time high, but a lot of stocks which matter to the viewers, a lot of HNI stocks, a lot of retail stocks, retail dominated stocks, they've corrected 5, 10, 15, even 30%. Is the bull market over, my friend? Pashupati?
Oh, sorry, I missed it.
You didn't hear my voice, or are you ignoring my voice?
No, I just didn't hear my name. I didn't know I had to be at attention. I think we're looking for cues to move forward, and I think that there don't seem to be any that we can see. So there is a sectoral shift because obviously people like India as a whole, they just want to be in the right thing. So you're seeing little nibbles in things like obviously insurance, but you're seeing real estate. The auto pack is a little bit over. People are looking at defensives. People are looking at private sector banks again. So it's like a turn, and they're just moving from one to the other. And as you said, all the good HNI stocks have got kicked in the last 2 weeks. So the HNIs are licking their wounds, and only the index seems to have done super well. So let's see. I mean, we're all here. We're all in the market. We're not going to give up and go away. I think people look at India as a global story. It's fantastic, but I don't agree with some of the sectors. I mean, I particularly don't like the IT sector, but I think alone because it hit new highs last week. So, but FMCG I'm very comfortable with. You're seeing nibbles in all the good FMCG stocks, so that's good. So we can just hang in there, as they say. Nikunj.
I want to go back to this point of reversal in Yes Bank, Suzlon, and even the third one is Vodafone. Kunal, would you read this as a trend? Because these are the typical HNI retail dominated stocks. That's where the sweating has started.
Yeah, it's a trend, and it's a trend that portfolios are not at an all-time high as compared to the indices, which are at an all-time high, and that is also one of the concerns which the markets have been going through over the last 3-4 weeks of this recovery rally for the index, because there has been a very strong sector churn. And I think that's that also indicates that maybe this kind of a rally which you've seen, this last 1,000 odd points rally for the Nifty, it's not been a strong sentimental positive rally for the individual investors. So my sense is that in terms of sector churns and in terms of these individual stocks, they are going through a leg of correction. Now the concern which is actually arising for the likes of Yes Bank and I think Vodafone Idea specifically is that these stocks are now threatening to go below their long-term moving averages, 200 moving averages, something which these stocks have not done over the last 1 year or so. So I think what we are now looking at for is that not just a corrective phase, but more of a steeper correction which could probably come back if in case these stocks correct below their long-term moving averages.
Notice the other pocket which today is really sweating, I think, is Pharma, Dr. Reddy, Glenmark, Granules, DVs, stocks which matter today. It's not they're out, but on a day when markets are up, when the trend has been strong, the Pharma index, which is a performing index, is down 1%. Naresh.
So they've really done well. So if you look at a Glenmark Pharma, in May, the stock was 1,000 rupees. Today, we are at 1,700 rupees. So the stock is actually up 70%. Just in August, the stock was at 1,400. We are at 1,700. So it's been a stealth rally across the pharma names. You've not even realized the day-to-day moves have been very small. Even a Sun Pharma from, say, roughly 1,500 in July is closer to 1,800. So it's been a 20% move in some of the larger names. So today it looks like a one-day pause or maybe starting up for a pause consolidation for the next few weeks. But if you look at the whole pharma pack, the rally has been 10 to 30% in a lot of names. It deserves a break as of now.
The word coming in as far as some of the pharma stocks are concerned. Pashupati, I also wanted your take regarding these Bajaj twins. Now with the Bajaj housing IPO coming to the markets, if you've studied that one, what's the view on that? And what's the view on Bajaj twins?
I haven't studied it to the extent that it should be, but obviously housing finance is going to be an easy low-hanging fruit for the market. And I think that all the housing finance companies are doing well. Bajaj doing it. They've got capital. They definitely want to be in the spread. So in the game, so they definitely want to come in. So that's there. And the minute you get a bump in the price, you already have it's a subsidiary, so they'll get the value. So people do the math and then take a small discount. And since it is a part of Bajaj Finance, so they'll suddenly get a big pickup. And great news for Sanjeev Bajaj and for the rest of the family. And they are the strongest finance company in this country by far. So great news for them.
Only green on the screen, but this green is not really something which is pleasing a lot of market men, because there are a lot of stocks where cracks have actually started opening up. Pharma for one, auto not going anywhere. Things are not looking exactly all that robust again for defense and railways and shipyard and all those defense related stocks. Kunal, I could look at the positive side and say that, okay, with such bad news, auto has not cracked. Auto has been in leadership sector. Tata Motors still in 4-digit. Mahindra and Mahindra, where is it? Mahindra and Mahindra is 2800. iShare holding at 5,000. So is auto exhibiting leadership, or it is time that they would also cave in?
I think it'll be time for these sectors to cave in, because when a sector rotation takes place, it's bound to be that the performing sectors which have been performing very well over the last 3-4 months, 5-6 months, depends on the time horizon we are looking at. I think they are the ones which could be at the brunt of underperformance. Now, underperformance could mean that the stocks may remain sideways. It could mean that many of these stocks which are overbought, they could start to get into a corrective phase. Now, for example, the likes of Tata Motors. Now, the stock had seen an exceptional run, I think, last week or so, when it had moved up, towards, I think, 1100 plus, kind of levels. And then in the subsequent next couple of days, you've seen the stock getting back into a retracement. So when a stock, when a sector gets into a moderation, stocks which have moved into excesses, these excesses they trim off, and then you see a price correction or time correction depending on the kind of excesses which are built to the stock price. And I think that's what I would probably believe that one should be looking out for. So which means that traders who are looking at auto sector as an overall space, I think should not be chasing the momentum. Let these stocks come back to their support points, mean reversion, the cool off in terms of indicators, and that's where one could probably look at buying these stocks rather than buying or chipping on momentum.
And which stock do you think is going to get closest to that level? Because two-wheelers haven't seen that kind of cool off as some of the passenger CV makers have.
So yeah, I think Eicher Motors is one stock which has been a lot more sideways. That's a stock which on the charts is looking strong in terms of a potential breakout. In terms of the tractor space, etc., I think Ashok Leyland is something which I've been bullish on. That stock at 250 levels, maybe another 10 points on the downside, closer to 240 mark, could probably be an attractive trade.
Okay, the other stock which is buzzing right now is UTI AMC. We do understand from sources that this could be a buyout candidate. In fact, let me take it across to my colleague Anurag Joshi to get more details on this one, because that's the latest that the deal is brewing, that UTI asset shares have jumped almost 4 to 5% on report that Tata AMC might be looking at buying some stake. Anurag, tell us more details.
Top institutional shareholders of UTI Asset Management Company have revived a plan to look at a proposal to offload their equity stake in the mutual fund. Tata Asset Management has emerged as a front runner in the transaction, sources tell us. Last year, Tata Asset Management had looked at UTI mutual fund, but the transaction did not go through because the talks had stalled. Now, if a successful transaction does take place, the value of the transaction for the 45% equity stake that the institutional shareholders of UTI AMC are likely to put on the block will be about 6,700 crores. So that's $800 million. Now, these institutional shareholders are Bank of Baroda, LIC, PNB, and SBI. Punjab National Bank has the biggest shareholding among them, and this followed by Bank of Baroda, PNB, and SBI, who have roughly about 10% equity stake in the company. Now, Tata Asset Management has equity stakes of Tata Sons, which owns 68% in the AMC, while Tata Investment Corporation owns 32% in the asset management company.
Pashupati, what is the best way to your mind to, let's say, participate in financials apart from banks and NBFCs? I mean, is it buy AMCs? Is it buying insurance? Is it buying even companies like CDSL, IEX? What is the best way according to you?
I think you're saying it. Obviously, the ones that are straight in your face can be probably avoided, but you can look at buying a CDSL. You can look at buying an BSC. You can look at buying NSE when it comes to market. You can look at the insurance pack, which is also, growth in per capita income means, the insurance has to grow. And, so it's just like saying, all right, this is what we are guessing, that the market is doing well, the economy is doing well, and therefore we're going to get another $2 trillion in the next 2 years. So therefore, what do we participate in? So obviously, it's got to be financials of some kind. I particularly don't like the fintech pack so much, but I prefer, for example, the private sector banks and some public sector banks rather than fintech. But that's my personal opinion.
Like fintech?
I don't like fintech.
Why?
Just because I just feel that, there's a lot of loans that are being given that without proper KYC. And I think that, when the dust settles, there will be some loan losses and that will eventually hit the banks. But you've got a big window before that happens. So, probably 2 to 3 years.
Good time to buy. Is it a good time to buy NBFCs in the near term simply because interest rates are coming down and they borrow wholesale and lend retail, and they would be the biggest beneficiaries of interest rates coming down?
Yes and no, but I don't particularly like NBFCs because I think that they have given out loans, with very little, not proper KYC, like gold loans, things like that. But I would prefer to buy the private sector banks who lend to these NBFCs because they will make exactly the advantage that you've talked about, which is, the mismatch with the short-term rates coming down, they will benefit, and I think that's where the place to be, according to me.
So Pashupati, what is it that you are doing in your PA? Has there been any a buy or a sell in the last month or so?
I've been actually sitting on my hands a lot. I'm been in and out of Paytm, some profitably, some not so profitably, but the last time, fortunately, was profit. I am now sort of sitting back because I think now it's in some different zone and it's flying up and down on news. I did shift some IT into some other, FMCG, more defensive stocks, because I have done a little bit of that. But, the challenge that I'm having is that I've got a lot of stock that's very old, and I now have to look at the 12.5% capital gains and, the tax effect. And so I'm trading a lot less than I would like to. It's not like in the old days where I had a trading portfolio and I used to trade a lot. That's just my personal opinion.
You don't like fintech, you're buying Paytm. I think Paytm is fintech.
Well, Paytm is also news. You're getting parts of the business. There's a marketplace that's not fintech. That's got some value. You've got this. They're basically not running the bank, but they're facilitating transactions. So I think it's not quite it was a fintech till they lost their license. So that's when it started getting attractive again, according to me.
Kunal, Hero MotoCorp, it's been this surprisingly strong stock. Bajaj again strong, and iShares has taken a backseat, right? So is it now like a change of pattern? The classic two-wheelers are coming back?
Yeah, I think it could be possible where I think Eicher Motors could make a comeback, and I think the likes of Hero MotoCorp, etc., they could probably get into a bit of a correction. So I think Bajaj Auto had been a complete strong outperformer from the entire two-wheeler pack. I think that stock managed to break past about the 10,000 mark, 10,600 plus was the recent breakout move for Bajaj Auto, and the stock has moved past about those levels. But then many of these other stocks within the sector, they've probably failed to play a catch up. So I think in this leg of up move, I would probably sense that Eicher Motors is one of the stronger one, which could probably try and make a comeback. The stock has been going through a time-wise consolidation at the 4,800, 4,900 zone for over the last, I think, 6 to 7 months. So potentially, if the stock gets into a breakout, breaks past about the 5,000 mark, 5,050 levels on closing basis, then I would probably believe that it could be good for at least another 250 to 400 points on the upside.
Okay, so that's the view coming in on some of these auto names. Mr. Advani, on that note, we let you go. Thanks so much for making time. But Naresh, what's the top CT trade right now? What's the closing trade idea?
So looking at Max Financial Services, very close to making a fresh breakout into new 52-week highs. And the whole insurance spec has been doing really well. So Max could be the next one which should break out into new all-time highs.
On your radar, Kunal, what are you picking up as a closing trade idea?
That will be by Bank of Baroda, expecting this last half an hour, 1 hour up move for Bank of Baroda to result into a potential short-term uptrend. So would look out for targets in the range of 265 to 270.
If you like this video, then like, share and subscribe to ET Now.